Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What's going on in the markets today? We're having a little bit of a down day. The Nasdaq's down about 150. Dow's down about 150. Nothing major, but they're having a little bit of a down day. All right, what do we got going on is we got what I call complacency. The market's really going nowhere right now. The VIX is very complacent, it's very low. But what it's telling me is that a big move is coming within the next 2 weeks. Now, this move could be an up move, could be a down move. Now, I'm betting that the move will be downward. Now, the reason I'm betting that is because of the junk bonds. The HYG are still telling me that the market's going to come in. Could it be wrong? Sure it could. Sure it could. We could get a big move up. It could happen. I just don't think it will. I think the next big move is going to be down, and I think the move is coming within the next 2 weeks. The reason being, if you know what Bollinger Bands are, they're kind of getting compressed on the VIX. This is where it's complacent, means it's building up energy for a big move, and I think the big move will be lower. Also, if you look at the options on the VIX, you'll notice that 2 weeks out, oh man, for the call is selling like at $3, where the puts are selling like at 40 cents. They're expecting the volatility to explode higher. These are the professional traders, not your average retail trader, is expecting the volatility to explode higher, which will bring the market down. We'll see how this plays out, but that's my take on the market. Your take could be completely different. All right, let's go over and talk about the real estate market for a little bit. Okay, so what I want to talk a little bit about is, well, the new home sales. Now, the new home sales in January had a little bump up in the volume, right? Now, the prices, though, they're still down about 20%. 20%. You see, the new home sales people, they've got this figured out. If you reduce homes by 20%, and they're also buying down the mortgage rate. So they've reduced the home by 20%, and they're buying down the mortgage rate, and they're getting a tick up in sales. People are going to buy the new homes because you can almost get them for the same price as the used home. You see, the used home, the mom and pop home, they don't understand this yet. What the new home sellers understand, because they've been in the game longer, they understand that the market's declining. And to get people to come and buy your property, you have to get below the market. If you're above the market's going to continue to fall. But if you're below the market, you're going to get the few buyers that come in. So the few buyers that are coming in are going to the new home sales, and the new home sales are spiking up, a little bit spiking. They're up about 3% in sales volume in the month of January. But it's really, once you get below the market, you'll get that buyer, but the market's still falling, so the next guy has to get below there. Everybody that's pricing their home up here, it's just going to be sitting there, and that's what we're seeing. We're seeing a lot longer days on the market. You see, it's going to be a race to the bottom. Now, I agree that interest rates have come down from 7% to 6%, and this may prolong how long it's going to take for the housing market to bottom out. A lot of people say that this is the bottom now. I could think that is so wrong. I don't think it could be farther from the truth. This market is circling the drain, and it's in the downward direction. It's going to take a lot of time to play out. It's not going to bottom out this year. It'll probably bottom out sometime in 2024. Okay, so a lot of people, I talk about Billy Bob a lot. Billy Bob got out at the top, right? He got out at the top, and he's a smart guy. Now, a lot of people think that I'm the Billy Bob. I'm not the Billy Bob. I'm not smart like Billy Bob. People think that I'm rooting for this to all crash. I'm not rooting for that at all. But you see, what I am is I'm a realist. Okay, look it. I have a lot to gain by real estate staying up. Most of my net worth is in my home. My home is, I'm not selling it. If I were smart like Billy Bob, I probably wouldn't try to buy it back. But that's not what I'm doing. You need a place to live. You need a principal residence. Okay, but there's a good time to buy real estate and a bad time to buy real estate. All I'm telling you is this is not a good time to buy real estate. Now look, I still have buyers. I'm a real estate broker. They come to me. They ask if it's a good time time to buy? And I tell them no. But they say they want to buy anywhere. And I say, well, as long as you can afford the property, I don't want you putting 50% of your household income to a mortgage. That's not being able to afford the house. You shouldn't be buying that house. But look, if you don't mind that the price is going to come down, and if you're only putting 5 or 10% down, you may actually get negative equity, right? And if you don't mind that, well, that's okay. Now, if you don't plan to stay in the house for at least 10 years, I think it's going to take 10 years before we see new highs, then you might want to rethink your decision to buy a house. But a lot of people, they say, but Mike, I want to set up roots. I feel like I'm just throwing the money away on rent. I want to build equity. Well, you might not be building equity. Equity might become negative equity. And if you're throwing money away on rent, that's the way a lot of people look at rent. And that's what all realtors will tell you. Oh, you're just wasting your money on rent. Come over to the buy side and purchase this. Then you won't be wasting all that money. You'll be building up equity. Sometimes it's better to rent than it is to buy. Look, if you can rent the house for $2,000 a month, let's say, and to buy the house, it's costing you $3,000 or $4,000 a month, you're better off renting. That's not throwing money away. You need a place to live. Now, granted, if houses are going like this, then it is a good time to buy, but they're not going like that anymore. That was the last 2 years. They jumped up 20% a year, 20% a year. If you bought before those 2 years, you were doing really well, but we've already come down 12% on average across the nation. Of course, not in your area. Your area is still going up, still getting multiple offers, and I like that. But on average, the prices have come down 12% in the last year. Okay, right? All right. We started the raising interest rates in February, where we are now, and that's where the prices started to come down. The selling season, they started to lower the prices 10, 12%. But it's worse than that. It's worse than that. People don't understand. That's the nominal rate. That's the price that they've come down so far, 12%. Now, I'm saying 50%, they will come down, and that's in the nominal rate. But in real terms, it's worse than that because they've come down 12%, but we've had inflation for the last year at 8%. So you're really down about 20% in real terms, but that's just the way it's going to play out. Now, look, I think inflation's not going away. I think we're going to have a lot of inflation down the road still, but and you got to take that into effect. Now, people say, well, won't inflation make houses go up? I actually think that it's going to play out different than that. I think that the asset bubbles are going to pop. I think the housing bubble is going to pop 50%, and that may be conservative. I think the stock market's going to pop 80%, but not yet. Not yet. It may push it up to new highs before we get that big drop of 80%. But you're going to have this bubble. The air's coming out of the bubble, and when that happens, the asset prices are going to deflate. So your house is one of those assets that I think is going to be coming down. But it's going to be weird because you're going to get this deflation in the asset prices, but you're going to still get this inflation going in the important things like food, like gas prices, like energy to heat your home. Those are going to be going up. This is not a good scenario. Look at, all right, what do you think is going to happen when the stock market drops 50, 60, 70, 80%? What do you think the Federal Reserve is going to do? Well, they see houses are going to be down about 30, 40, 50, 60%. What's the Federal Reserve going to do? We all know the answer. The only thing they can do. They're going to start to print the money. They're going to start to crank the money out, right? To reinflate the assets, just like they did in 2009. Now, in 2009, they openly admitted it, right? They said, look, house prices are falling. We're going to print money. We're going to print $4 trillion, and we're going to get that up. Well, they printed a lot more than $4 trillion. They printed $4 trillion just in 2009. We've been printing money ever since. So when the air comes out of the bubble and the assets start to drop, the houses start to drop, the stock market starts to drop, stock market down over 50%, houses down over 50%, the Fed's going to start to print money to try to inflate them. Now, you see, I don't think it's going to work this time. I think it's like pushing on a string. They played that card out once already, so they're going to print more money. And the amount of money is going to be just insane. I mean, it's going to be insane. You think think 4 trillion a year? No, I'm thinking 10 or 20 trillion a year. They're going to hyperinflate. And that's just what's going to happen. The way I see it playing out, right? Will be hyperinflation after you get the crash in the asset bubble, right? So the asset bubble crashes, the Fed starts printing the money as fast as they can, getting it out there, not 4 trillion a year, 10. 20 trillion a year. But the assets aren't going up. But here's what's happening. Your dollar, the purchasing power of your dollar is going to go to zero. It's just going to go away. It's going to hyperinflate away. And this is where they'll have to revert to the new system. What's the new system, Mike? It's going to be a central bank digital currency, right? Because they're going to need to get negative interest rates, and they're going to need big negative interest rates, and they can't do that when they have this cash. So the dollar that we know, it's dying. It's going to go away, and it's going to be replaced with the central bank digital currency. All right. So that way, like the money you have, you'll have it on your screen, on your computer, on your phone, all the money. Let's say you have $10,000, right? Well, they're going to need to get the negative interest rates, and that $10,000 is going to turn into $9,000. That's not, if you don't spend anything, they're just going to get negative interest rates and start stealing the money, trying to stay in power, trying to keep a system alive. See, the dollar's going to go away when they hyperinflate, and they will hyperinflate once we get that crash in the asset bubbles. Now, once again, this is just my take, and this is not what everybody thinks is going to play out. A lot of people think that, hey, everything's fine, Michael. We just had the State of the Union. They told us it. Everything's doing great. Strongest economy. I mean, we're just booming. Maybe the stock market will get to a new high. And I'm not saying the stock market won't. I'm saying it's very possible that we get to a new high before we get that big crash. I think that crash is going to be 70, 80%. That's just my take. I think the housing market has already started to crash, and I think that's going to get down to 50% off sales. This is my take. If you like this stuff, give me the thumbs up. Why not? It's Wednesday. Hit the subscribe button. I want to talk to you more. We got some exciting stuff still coming this week. Okay, get out there. Have a great day. Bye-bye.